Today we're going to cover the 5 federal financial aid programs. We're going to talk about the free money like the Pell Grant, and we're also going to talk about the loans. Now these programs are available for almost all students, and just about everybody needs to understand how these programs work. So let's go ahead and get started with the Pell Grant. Once you show a need, or once you go through the FAFSA process, that makes you eligible for the 5 federal programs. Now these are the core programs. There's a couple additional programs out there that are a little more niche for some situations, but just about everybody will be considered for these 5 areas. So we have the Pell Grant, the Supplemental Grant, Work Study, and the 2 types of loans. So the Pell Grant is a grant that is free money paid to the student. Typically it's focused a little bit on the lower income families. So it used to be under $50,000 of income. Now it's more like maybe $100,000 in income or less. Means you might have a shot at the Pell Grant. Now it depends a lot more with the new calculations with the new SAI method. It is possible for some families in the 100,000 range to still qualify for at least a minimum Pell Grant, especially if you have a large family. So a minimum Pell Grant changes every year. It's currently about $800 for the minimum and $7,395 or $7,395 is the largest grant. There are ways where you can, based on your taxes alone, will help you determine that you may qualify for the maximum Pell Grant. In addition, you may qualify for the minimum Pell Grant or something in between. But again, once you get to about 100,000 of income or more, you're less likely to qualify for the grant. Next, we have a supplemental grant, Supplemental Education Opportunity Grant. Now that's a grant that is administered by the colleges. So the federal government gives a block of money, say $1 million to a particular college. And then they have the college determine who gets some additional grant money on top of the Pell. Usually this is focused in on the high need families as well, where again, smaller and the smaller, lower income, first generation and that type of thing is where that money would be focused as well. Next, we have Work Study. Work Study is a job on campus where, again, there's a lot of work on campus, from running the food service to cook, frying the burgers and frying the eggs and all that stuff in the food service, doing the filing and answering the phones and help desks and installing computers. And there's all kinds of work that students can do. And many times they will do it. And the reason it's considered work study is because the federal government is paying a portion of that salary. So the colleges get low-cost labor, and the students obviously get paid to do the work. Now, it's just like any other job, however. If you don't show up to work, you're not going to get the work study. And the work study is not, deducted from your tuition or taken and automatically applied to the tuition either. So you get paid just like any other job. It's assumed that the student will do something useful with the money. They could go spend it on spring break or at Starbucks, or they could use it for books or towards tuition. They're going to be paid when they earn it. And if they don't show up, they won't earn it and they won't receive it. But that is work study. And for many families, it's not a whole lot different than if the student worked across the street or off campus at some other job, other than maybe the pay's a little better at the college or maybe not. But certainly the hours can be good. And most work study jobs will give you, time off for the finals week and stuff like that, where the sandwich shop across the street may want you to show up no matter what's going on in your life. They need you every Tuesday night, whether you have a final or not. So that, again, some flexibility for work study. Then we have the direct loan program and the plus loan program. Now these are loans from the federal government, but they are administered by the student aid offices at each of the colleges. So once you qualify for the loans, then the government sends the money to the college directly, and then the college gives you credit on the bill saying, well, this much of the loan is offset, so therefore your bill is going to be smaller because you signed up for the loans. So we have the direct loan, which is a loan to the student paid back by the student. Mom and dad are not involved. And we have the plus loan, which is a loan to the parents paid back by the parents and the student's not involved. Now, the direct loan or the loan to the student can be subsidized if you show a need. So if you show a need, essentially the interest will be zero on that portion of the loan until you graduate. So you could borrow $3,000 as a freshman and it's subsidized. You graduate 5 years later, you still owe $3,000 on that loan. Now, other families would get that same $3,000 loan potentially, but if it's unsubsidized, they still don't have to pay, but the interest accrues while you're in college. So you graduate owing $3,600, let's say, based on whatever the interest rate was and how long it was between when you received the loan. So the unsubsidized loan will accrue interest, but no payments. And then finally, the direct plus loan is a loan to the parents. They can defer payments as well until the students graduate. And you'll notice that the plus loan is always about 2.5 percentage points higher in interest rates, and that's by design. The interest rate is declared every year, and that interest rate changes from year to year, but each loan is fixed. So you'll get a fixed loan for your freshman year, a fixed loan for your sophomore year, a fixed loan, and then the parents could also get a fixed loan at a different interest rate. And then finally, the maximum that the student can borrow on the direct loan is limited to $5,500 for a freshman, $6,500 for a sophomore, and $7,500 for a senior and junior. So the student grand total, they can borrow $27,000, and a big portion of that could be subsidized if you show a need, but not all of it. And that's all the student can typically borrow. Now, the plus loan or the parent loan, that loan can go up to the full cost of attendance. So the parent can borrow on a plus loan, say if you're going to expensive school, say Harvard at $80,000, you could borrow all $80,000 on the plus loan. And again, I'm saying you could, I'm not saying you should, but the plus loan will go up to the full cost of attendance. So I think that's one area where people will often stumble, is the college points out that, hey, here's this loan, and the parents are in a tight situation where they've got to figure it out quickly, and they just sign up for the plus loan because they don't know what their other options are. And again, there's a lot of debt involved in that. That's not a good plan, of course. So again, the direct loan is limited to the student. The plus loan covers the full cost or whatever's left over of the full cost after other aid. But that loan is in the parent's name. So the whole idea that there's students out there that are borrowing from the government hundreds of thousands of dollars and getting deep in debt is not true for undergrad. It is possible to borrow a lot more money for master's and PhD and doctor and lawyer type things, but generally you cannot borrow unlimited amounts of money. So those are the 5 federal programs. The Pell, the supplemental, work study, and the subsidized loan are all need-based. So you're going to need to show a need to qualify. And then the unsubsidized direct loan, any student can qualify for. And the direct plus loan, any parent can qualify for, assuming you don't have very bad credit. So most parents qualify, but if you have a bankruptcy or a lot of very bad credit history, then you'll be disqualified from the plus loan. All right, there you have it. That was the 5 financial aid programs that the federal government offers. My name's Brad Baldridge, and this is Taming the High Cost of College. Thank you for watching, and please like and subscribe, and there's a lot more great information in the description below. We'll see you in the next episode.